Some people see a $10,000 mistake and slow down, hit the brakes. Some people hit the gas and go shopping. That's what we're going to talk about today. We're going to talk about financial delusions and more self sabotage, especially when it's with the BMW owners. Welcome back to the channel. Make sure to like, comment, subscribe. We're trying to get to 4,000 subscribers. Watch the full video. Let's dive in.
They're on this 22 high country Tahoe.
Yes, sir.
What is their trade?
18 BMW.
Geez, it's got 140,000 miles on it.
Yes, sir.
Tough part here is that we're going to be carrying a little bit of negative equity. They owe 14.8. It's worth probably $5,000. It's like just a little 3 Series, and market's not too strong on those. That's like almost $10,000 in negative equity. They're trying to buy a used vehicle. It's going to be pretty tough. The good news is this Tahoe has a massive book value. We're selling it for 43 basically, but the book value on it is 52, which is an incredible spread. So at least we're going to get a little bit of a good advance there. What did they say about the cash down?
They said they may be able to come up with a little bit of cash, and they did understand they was going to have some negative equity, but I don't think they was going to take that much with negative equity.
Okay. And how about payments?
They had like $1,000 max it was trying to be for his payment.
How's the credit?
One of them was in the 700s.
Okay.
And one was in the low 6s.
If you had to get them for some money down, what do you think we can get out of them?
Probably roughly about 3.
Okay. Book value is 52,950. So a bank would finance 58.2 on this vehicle. They've got $10,000 of negative equity, but we're only selling it for 42. So I think we might be just right there. I think we're going to need a little bit of cash down, but let's submit this deal across. If we could get a little bit of cash down going on this, I think we'd have a lot stronger chances of an approval. Just tell them, hey, we got to submit it first, but we don't want to submit it without the cash down on it because we don't want to get a rejection and then have to fight back uphill.
From your experience, do you think I should tell them about the new trucks that might have some rebates?
A new truck's going to advance a lot more, but if we're fighting a $1,000 payment max with $10,000 worth of negative equity, we're going to be in a tough spot because the good news here is our Tahoe is priced at $43,000, right? If you had $10,000 onto that negative equity, this is for simple math, you're only financing $53,000. You're going to pay some taxes and some fees in there too, so let's call that $55,000. Then if they were to put some money down, that's going to come down a little bit. I think if they're willing to get to the 1,000, they can put a little bit of money down. I think we could get a car deal here. I don't want to commit them to anything that they're not comfortable doing.
Yes, sir.
So let's go see how much money we can get out of them for down, because that's going to reduce the amount of debt that they're going to be financing. Go grab that, come back, and then we'll go from there.
Being $11,000 underwater and rolling it into a $42,000 bigger Tahoe, right, isn't a fresh start. And that's what these people think it is, right? It's just bringing old mistakes into a more expensive future. Negative equity situations, or this crisis of negative equity, is an impatience problem. Everybody buys car with emotion and not math. But mathematically, this $11,000, right? Every $1,000 that you're negative for is $30 in payments, right? So if he's $11,000 negative equity, that's $330 that you're going to have to take into that new Tahoe that you're trying to finance. All you have to do is pay down this car aggressively, be done with the loan, sell it, take that money and buy a more reliable car. Do that for 2-3 years, and then you can buy this Tahoe. Like, you would think most people get trapped because they're stupid, though, but that's not really the case. Like, they get trapped because temporary relief feels better than temporary discomfort. Like, for them to struggle for 2 years, they would never go through with that. But to stunt and flex for 10, 15 years and be broke and have nothing to show for it, it's common sense. And I've learned the hardest thing to do is the right thing.
What are the rich people cars that are like low key? So only like super.
So I have to jump in on this one. I've lived in Scottsdale, Arizona for over 12 years now, and anyone that's lived in this city for a couple years starts to recognize the trends. The trends are very simple. Everyone's a millionaire. Everyone drives a Mercedes, a BMW, an Audi, and a Range Rover. They're all over the town. But you know what? As a licensed mortgage broker and realtor, I see a lot of the finances come across my desk. And honestly, there's not that many millionaires here. And the sad reality is, credit scores are pretty poor, debt to incomes are really poor, but they're all out there driving these high-end used pre-owned luxury cars. You want to know the secret with the really rich people who drive around here in this town? Yep, that's right. Toyota, Honda, and Ford. They are the most popular brands for some of my most wealthiest clients. And the best part, my favorite client, who's a really renowned surgeon, absolutely loves his Honda CR-V. I also have a very well-off banker who loves his Subi. Is all about Subaru. Guys, the secret to wealth is not giving a dang about what other people think about you or whatever you're driving. The very wealthy could care less. They just want something reliable. And most of these brands, like the one behind me, Toyota, are incredibly reliable, and they hold their value so well. So if you ever need to sell them, you can get most of your money back. And guess what? You can feel good about it with the peace of mind that the next person who buys it from you, it'll probably go another 100,000 miles. The secret to the rich and what they like to drive is simplicity.
And you guys heard the guy. The richest recipe in being rich is not giving a damn about what other people think. And the race never ends because insecurity has no finish line. A paycheck can increase income. It cannot fix insecurity. It cannot fix impatience. It cannot fix somebody that has something to prove. a lot of these people that are wealthy really respect their money because they actually took a long time to get there. It took patience. It took delayed gratification. It took them not giving a damn about nobody. People are not chasing happiness no more. People are chasing this subjective relief that they think is going to get people to like them, which again goes back to insecurity. Now we're seeing this because we have somebody that's $11,000 negative equity trying to buy a bigger loan of a Tahoe. You want to be rich? Imitate the right things that the rich do. All the other stuff is noise.
Buying a new car is getting out of your reach? Well, you're not imagining it. A new report finds the average new vehicle now costs about $50,000, while used cars are averaging nearly $27,000. Experts say automakers are dropping many of their lower-priced models and focusing on higher-profit trucks, SUVs, and luxury vehicles instead. Industry analysts say more vehicles priced
SUVs and luxury vehicles. These people study human decisions and psychology, or else they wouldn't be profitable. You got to give the people what they like.
under $25,000 are disappearing altogether, while more models above $60,000 are hitting dealer lots. And with many buyers priced out of the new car market, demand for used cars is pushing those prices higher too. So the bottom line here, if you're waiting for car prices to fall, experts say don't expect major relief anytime soon.
After COVID, cars have literally been, cars are so bad right now that I literally went to Coparts, an auction site. I was trying to buy a CRV, a RAV4, or a Mazda CX-50. I swear to God, it is $150,000 for, and they want you to buy it for $10,000 to $12,000. And you have to understand, when you're buying it from an auction, there's mechanical issues, there's body damage, there's water damage, there's hail. So you have to keep in mind also that you need extra money to get this car in good standing condition for you to drive. Then I went to Google and I searched up cars that are near me. A Toyota RAV4 that's 2017, 2015 is going for $27,000 with 60,000 miles. That's almost a 10-year-old car. I know they keep their value, but still, like, we live in a worse time. And have you guys also noticed, like, these cars' quality has went down? Like, they're more expensive, but bad quality. Go to TikTok right now. I've seen videos where people are buying Tahoe Suburbans, Chevy Silverados, Ford F-150s, even some Toyota Tundras, blown engines. People have check engine light. People have debris in their engine or metal shavings early. Cars are plastic now. They're not going to last. And you want me to pay this much? I think things are going to go back to how they were. People are going to buy more cash cars. We're already being squeezed out of everything, right? Some people spend childcare on what a mortgage is now. And you think it's okay to buy a $50,000 car? Like, I'm scared thinking about that.
You think a $700 car payment is crazy? Either you live under a rock or maybe you just aren't good at math. And I'm saying that as someone who was in the $700 payment club back when interest rates were 2.49%. But maybe I would have an average car, so let's look at one. Let's take a Toyota Camry, one of the most practical cars you can buy right now. A 2026 Toyota Camry, $36,000 with minimal options, and that's before any dealer fees. With good credit, you're looking at about an 8% interest rate. Let's say you choose a 5-year car loan. That's still almost $750 a month. This is for a Toyota Camry, not a BMW. And that's if you have good credit, which a lot of people don't have. Yada, yada, yada. You don't need to buy a new car. You lose value when you drive off the lot. Fine. Okay. Let's go for a used car then. 2022 Camry, $29,000. 5-year car loan, again, average credit, 12% maybe on a used car. You're still looking at $650 a month. All this before any taxes or dealership fees on a Toyota Camry that's not even pushed to start. You gotta ask yourself, is $700 crazy or is $700 crazy for you?
During the time of the used Toyota that he just showed us, that car costed less than what that car was going for, $28,000. So now you're telling me it's used and it costs the same as it was new, and the newer 2026 cars is $35,000 for 750. You have a choice not to participate in the circus. I just don't understand. You don't have to play this game. Who cares? The saddest part about modern debt is how normal it looks. Somebody would look at that and be like, I think I can afford that. I think I could do it. Like, most financial decisions, like I said, never begin with math. It's just an ego thing. And some people have this thing where, like, new is better. No, mechanically, new is never better. Things go down in quality. People take shortcuts, right? Have you ever seen mechanics driving newer cars? Ask yourself that question. I get it. A new car looks good, but look around. People need to be more vigilant and more observant, right? Mechanics don't drive newer cars. And I have a lot of mechanic friends, personally. Like the guy that works on my car, same age as me, does not drive newer cars. I think his newest car, year is 2004 Corolla, and he has a 1999 Tahoe. Y'all playing the wrong game, man. You don't have to participate in the circus. Never.
I just had a customer who totaled her car before she even made her first payment. The previous car she purchased was an Elantra and she bought the car from me. Took time out, got her approved, and I told her, I was very specific, do not leave that finance office without getting gap insurance. She sent me a text earlier this morning saying that she was going to stop in and her car got totaled. She already had her total loss letter from her insurance. She comes in and we look through her previous contract to see if she had gap, and she did not get it. Her insurance valued her Elantra at $12,500 and she owed the bank about $16,000. That's a $3,500 swing. So even though she doesn't have that car anymore, she still owes that money. Now, in regards to the potential car that we're
For an Elantra, 34,000 for an Elantra, crazy.
trying to get into, I had my manager look through the inventory to see if there's anything that would work. He tried for a Sonata. Now, this Sonata was $2,500 more than the previous car we got her approved on. After about 10 minutes, no luck at all. We struck out. I could not get her into another car. This is why I tell you guys, do not leave the dealership without gap insurance if you're barely putting any money down. I do not want you guys carrying a balance on the next car because it's so much harder to get approved on the next vehicle.
To all my people that make good financial decisions, you don't have to worry about this because you make good financial decisions. This does not concern you. But to not have gap insurance is the craziest thing. Like we reacted to a video, I think 3 or 4 videos ago, and you haven't watched those videos, go back and watch them. But this lady had no gap insurance in her car, and there was hail damage. It wasn't even her fault. If it was a collision that she caused, makes sense. It was hail damage. She had no control over that. And now she has to pay for not paying for the right things when it comes to financing these depreciating games of finances. You can't take that risk. Life comes at you fast. You have some people that use their phone. It might not be your fault. It might be a hail damage. There might even be some sort of a thunderstorm, and your car might get caught in some sort of a ditch with a huge water. That happened to me before. That happened to me before. Luckily, I wasn't financing that car. So they paid off that car. Insurance paid off that car, and I got a little bit of positive equity. But for some people, that is their reality. Because the car payment is already expensive, they don't want to take a risk on something that's going to help them, which is the gap insurance. So stay safe. All these videos, what they have in common, and my whole channel, is just comparison culture. Comparison culture has turned neighbors into competitors. Now everybody feels poor standing next to borrowed wealth. Literally, that's what it is. Jake and Evelyn got a Tahoe. I'm going to get a Suburban because they're not going to shatter my self confidence. As if your self confidence is tied to things that don't serve you. And every time I see a BMW, I see a Mercedes, I see somebody that has a hyper luxury car, not all people are struggling. But when you look at 7 out of 10 people truly are underwater, truly are tired of the payments, why is it that you get to have a car you like, but then go to a job you hate only to afford the car you like? That's a good question to ask yourself. That's a good question to ask anybody. And a lot of spending that I'm learning is grief, just driving nice cars. It's sad. It's sad. Like I said, people are not chasing happiness anymore. They're chasing some sort of a dopamine release or temporary relief. But the consequence takes 7 years, takes 5 years, 60 months, 48 months, 74 months, right? And just like I said, and I'm ending here, most financial disasters never begin with math. They begin with ego. And ego is one of the 7 deadly sins, right? And ego is part of the 7 deadly sins that you don't even get anything that is good in return. So think about that next time you try to buy a car. Are you asking the right questions? Are you questioning the narrative? Or are you playing a game you don't understand? But I'm going to end the video here. Make sure to like, comment, and subscribe. We're so close to 4,000 subscribers, right? We're trying to get to 10,000 before summer is over. Share, send, click the post notification bell for future videos. With that being said, be good, do good. I'll catch you on the next one. Peace.